So, what is going on with SoFi stock? It's off to a very bumpy start in 2024. So, it started off with a little 3% downward movement. No big deal. Those type of moves happen all the time in the stock market. But come Wednesday, it was down 13.5%. So, there's a major catalyst that happened that caused this negative price action in SoFi. And I'm going to deep dive into that, what it means, why is it important, and how you should approach trading or investing in this stock moving forward in the year of 2024. But real quick, before we do that, if you could like this video, subscribe to the channel, and share this video with your friends and family, that would mean the world to me. And I just want to say thank you so much for everyone who's been watching these videos. We just hit 1,000 total views on all the videos that are listed on this channel. So guys, it's unreal to me. It's just I can't even put it into words. Making these videos really helps keep me accountable. Um, Researching my own stocks, bettering my own portfolio. So hopefully I'm helping you, but it's also helping me as well. So thank you so much to each and every one of you for all that you do by watching my content. So to answer your question as to why SoFi went down, if you look at this weekly chart here, you see that it was trading at a high of about $10.31, and it has now barreled down to about $8.40 as of today. So SoFi last year, which doubled in price in 2023, is now stumbling out of the gate in 2024. SoFi stock slid down 3% on January 2nd, which was the first trading day of the new year. And then SoFi fell even further on Wednesday morning, with the stock losing an additional 13.5%, which was, of course, a massive downward move. So, which analyst downgraded SoFi? Now, I'm not going to lie. Is it just me, or does this guy have a really punchable face? So, this here is Michael Perito. Okay, Michael Perito is the analyst who downgraded SoFi. So, for all my bulls out there on SoFi, I'm pretty sure you have a deep hatred for this gentleman here. Okay, so Michael is an analyst who works with Keefe, Bruyette, and Woods, or KBW. So if you hear me saying KBW, I'm simply referring to this group. So KBW is a stifle company. They are an investment banking firm headquartered in New York City. They specialize exclusively in the financial services sector. KBW's primary business lines include research, corporate finance, equity sales, and trading equity capital markets, debt capital markets, and asset management. When banking firms make an opinion on a stock, it can greatly impact a stock and their price. I'm sure you've seen this happen multiple times with companies like JP Morgan. So, as you can see here, there's a stock recommendation scale that analysts use to rate certain stocks. So, number one is bearish, which just means that, hey, this stock is doo doo. You need to sell, you need to get rid of it under any circumstance. The second one is underweight, which means it's a moderate sell, it's a weak hold, and it's underperforming overall, and you might want to reduce your position. The third way is neutral. It's essentially the zero on the scale. It's not positive or negative. It's just kind of there. The fourth one is overweight, which means it's a moderately good chance that if you buy it, you're going to make money. You might want to start accumulating more shares. This stock is looked at that it may outperform in the future and make you some more money, and you may want to add to your position and grow your position size larger. And the last way is buy. So buy is on the bullish spectrum. It just means that, hey, no matter what's going on with this stock, you're more than likely going to make money. So where exactly did KB Dubs list SoFi at? So Michael went ahead and listed SoFi as a underperforming stock. So originally SoFi was at market perform, which is more on the neutral to buy side, to a very bearish case of underperforming. Not only did Michael lower it to an underperforming stock, he also lowered SoFi's price target on the stock down to $6.50 a share. So, who exactly is Michael Perito? Is he even a top rated analyst? We obviously know who he works for and which bank firm he works at, but is this someone that we can trust? Does he have a high success rate of rating different stocks and being correct? Or is he just some guy that throws out his opinions and it holds no weight to anything really at all? So, let's look into that now. All right. So, looking at Michael Perito, I don't know about you guys, but he's pretty good at what he does, to put it lightly. So, Michael Perito joined KBW in 2011 and is responsible for equity research coverage in the bank and financial technology sectors. Michael Perito is currently ranked number 361 out of 8,649 Wall Street analysts. Damn, Michael, you just killing it out there. So, again, I'm not sure about you, but if Michael says SoFi is going down or overvalued, he's probably right, and I'm going to listen. Michael has a success rate of 63% out of his 212 ratings on various companies. He was right 134 times out of those 212. That's pretty dang incredible. Mr. Perito also has an average return of 14.80% on all the stocks that he has rated over his 11-year career. All right, so quickly, just to recap, we've covered all the reasons behind SoFi's recent 13% plus downward movement. And you might be asking yourself, Jason, where do we go from here? So, personally, I believe timing the market is the most difficult thing about trading stocks. That being said, I prefer to invest rather than to trade for the most part. So, you might be asking a few questions like, hey, Jason, I bought in at $9 to $10 a share. What should I do now? Or you might have the question of, hey, now that SoFi is trading at $8.40 a share, should I buy now? And what does this all mean? So everybody is doing something with SoFi stock. And honestly, my plan is to simply do nothing, meaning I'm just going to hold this stock. So in the first question, whether you should buy it at $9 to $10 a share, my best advice is don't panic sell your position. If you already own it at a premium price of $9 to $10 per share, all you need to do is dollar cost average. Negative news and these catalysts are going to happen all the time. Only weak hand investors fall out of position, especially if they've done their due diligence on a company and they believe it's going to be successful over time. Why would you panic sell and just throw all your potential future profits down the drain? Now, I would approach this dollar cost average in a very slow and steady way, meaning if your average is $10 a share, I wouldn't go double your position and buy a bunch of them at $8.40 cents a share. What I would do is I would buy maybe 5 shares here, 10 shares there, 25 shares there, just seeing how low I can get in and really, aggressively bring that average down. It's going to save a lot more cash in your portfolio doing it this way. And I think it's going to be a lot less stressful for you, especially if you're kind of on the fence whether you should be investing in SoFi in the first place, or if you have a little bit of uncertainty to whether you think it's going to be, a big stock in the future. Now, if you're asking what you should do if you bought it, if you're a new buyer to SoFi, and you're asking yourself, should I buy this at $8.40 a share? I would tell you wait until you get in the $7 to $8 range. We are still waiting to see what they can do in the first quarter of 2024. If SoFi remains unprofitable on their earnings report for 2024, then this stock will run a lot lower than what it's currently trading at. So I don't think that SoFi is going to go under $4 a share again, but I definitely see it hitting the low sevens probably pretty soon, especially if more catalysts keep coming out. But I do know one thing for sure, and that's if anything comes up with SoFi stock, whether it be a news article, analyst downgrade, positive news, whatever it may be, I will keep you posted. So overall, just to reiterate, just be patient. There's a lot of unknowns in 2024 as the year has just started. Whether it's analyst downgrades like this situation, bad earnings, a challenging political or economic straddle with interest rates, it's just best to be patient and either wait for the dip or dollar cost average if you already own SoFi shares at a more premium rate. So just remember, everyone, these are just my opinions. It's not financial advice, but I will always give you my honest opinion on how I would invest in a certain stock. Damn! If you're still here and you haven't subscribed yet, then what are we actually doing here? Anyways, guys, I hope you learned a lot about why SoFi's stock price recently fell. If you'd like me to cover any other stocks, please mention them down below in the comments. Have a great night.